Hello everyone, this is Ryan with Numbers Up Finance, and today I would like to discuss natural gas. So recently I discussed a good swing trade setup, despite, market volatility, inconsistency, things like that. I discussed a good swing trade setup, and that actually had to do with oil. USO was the ticker symbol. But today I would like to give my outlook for natural gas over the next couple weeks. Whether or not I want to position bull or bear, long or short actually, over the next couple weeks, and a couple of factors going into it that influence my decision. So to begin, I want to take a look at ticker symbol /NG. This is the future for the natural gas, trades around the clock, and essentially it's measuring the price per million of British thermal units for gas in the United States. So essentially we'll just leave it at the price per natural gas, simplest way to put it. Right now, we're currently trading at around 303. We're finishing up the market hours for January 4th, new year for 2019, that is. And yeah, it's trading at 303. So as we can see here, we had highs in late November, or late 2018 rather, so early November. We hit a high of around 493, and we had quite a sell-off since then. But to begin, or to preface this at least, I want to talk about the idea of supply and demand, and I want to talk about how that influences our price of not just natural gas, but all positions as well. But it's very evident with natural gas. So we had this high in 2018, in November that is, of natural gas trading at 493. And what actually caused that is the weather forecast. So essentially colder temperatures come, especially later in the year, and as temperature decreases, the demand for natural gas will intuitively increase, and what we know about basic economics is that as demand for something increases, price will generally increase. That happened with natural gas, and that holds true for all stocks. As the demand for a stock or a position increases, well, the price will increase as well, and that is subject to countless factors that occur in economic and social life. But with natural gas, I believe it's a little straightforward. I mean, obviously, you're not going to have a high occur every year in November, and you're not just going to have a big sell-off when the temperature changes again. There are many different things that influence it, but temperature is a very good measure of that. And we can just tell that forecast and the way the weather was predicted influenced a high in 2018 in November because of what was happening. So essentially, we had bone-chilling forecasts projected, and that pushed the demand for natural gas up, and that pushed the price to a yearly high. And we can see that in November we pushed that high, but we actually began to sell off after that. So why did that happen? Well, yes, we had bone-chilling temperatures occur, or called for at least at the end of 2018, but those actually thawed out, especially in late December, which is when our sell-off became the most prevalent. Those thawed out, and those were no longer holding to the way that they were originally accounted to, and that began to push the price of natural gas down because people thought, hey, warmer temperatures, demand for gas will decrease, price for gas will decrease. Pretty simple. So that sent us from a high of around 493 to what we're sitting at now at $3 roughly, 303. Again, that was because of the thawing of temperatures, there was the thawing of forecasts. But before we dive into the news-oriented stuff and deciding whether to go long or short, I want to first talk about technical analysis. Technical analysis plays a big part. So the first thing I want to talk about is the technical support level that exists at 288 as a price point. So why is this a technical support level? Well, many reasons. Actually, if you let me pull up the 10-year one-day chart, each candlestick representing 1 day, that is. If we just go through the last couple of years of /NG as a ticker, we can see how often this 288 support level is, or technical level rather, is tested. So we could say it's testing it right now, sure, but let's take a look. Let's go back a little bit further. If we go back to around 2015, we can see that it tests it multiple times. Multiple times. In fact, you could even say it's riding that 288 level. It's constantly bouncing off of it, coming back, bouncing on, coming back, testing it for the most part. We have another test here between 2015 and 2016. And again, we were riding it in the 2017 year as well. So that kind of shows how much of a significant level it is. Clearly acts as a point of significance in that regard. Acting as a support right now, 288 level, that's the first technical point of significance that we need to cover. The next technical point of significance we should cover is around the 250-ish 50-ish, pardon me, region. And this acts as a technical point of significance for the same reasons. It's been tested multiple different times over the last couple of years, and in fact, it's served as a support quite often, but has actually served as a resistance once or twice over the last couple of years, as we can see. So for those reasons, for being a point of common reversal, we say that it is a technical support level. And the last level we should cover is around the 330-ish region, more so around 338. Technical significance level, why? Well, it tests once here, gaps above here slightly, but tests for the most part, rides it pretty nicely in the 2017 year, tests multiple times in the 2016 year, and for that reason we can say, hey, if it's reversing at that point, testing at that point, then it is a technical significance point. And in this case, it's going to serve as our resistance, actually, because it is above the price point that we're at now, and we're going to find out over the next couple weeks if we're going to be testing it. So we're sitting pretty much parked at this 288 significance level. Actually, if we look at the candlestick for today alone, we had a low of 289 for natural gas, and in that regard, I mean that's pretty much where it opened. Opened at 291, that is. We were pretty much parked here today, and then we pushed up. And, I believe that this push up is going to continue on, and I'll tell you why. So from a technical analysis standpoint, we have the support level that we're playing off of. We've been parked on it for a couple days, and I believe that today is an indication that we're going to start bouncing off of it. What else goes in our favor for technical support? Well, we have the fact that it's purely oversold. If you look at the RSI indicator, it's incredibly oversold right now. It's sitting around that 30-ish region, and general rule of thumb is if we're sitting at a 30 RSI, it's oversold. And even if you take a look at a point where it's overbought, if we take a look when it's overbought here, sitting at an astounding RSI of 83, we actually hit our November high, and then as the price came off, it was no longer overbought. So something being extremely overbought or extremely oversold is intuitively something that will tell you it's the opposite's bound to come. It's bound to bounce back. That's just how things work. You can also look at how overextended it's been by looking at the MACD. The MACD is plummeting over the last couple of weeks. It's incredibly overextended, and in this sense, just the fact of it being merely oversold tells us we're having an intuitive bounce coming soon. Now, that isn't something you can just say in itself. You can't solely say, oh, it's oversold, it's going to bounce back. Well, if it were that easy, a lot more people would make money in the stock market, but it's not that easy. But those are just some factors contributing towards incentivizing to long. What else incentivizes us to long? Well, we can take a look at mere risk-reward ratio. So if we're sitting parked at this technical analysis point at 288, and we take a look at the risk-reward, just testing the next technical significance points we have that I discussed earlier, we have about 15 to 16% positive gain, while we have about a 13% fall to that 250 level. That's give or take. That's a pretty rough estimate. In fact, if I zoom in a little more, you could probably get, we'll just actually zoom in a little more. Just cover that. We'll just go from line to line. It's a pretty rough estimate, but we're looking anywhere from around 16 to 17% to around 13% loss if we test that next support level. But there's more to it than that, because if we actually look at it in a bigger sense, very rarely do we dip below this 250 support level. Very rarely. It's been tested multiple times since 2016, and it's been holding very strong for a couple of years now. So even if we were to start gapping below this 288 significance level, we would likely test that 250 level and then have a reversal after that. On the flip side to that, though, for the bull side of things, who's to say we can't break this resistance level here, or at least gap above it? Over the last 2 years, we've had 3 gap aboves, times where we gapped above this price point level, and in fact, just recently, we shattered it and created a new November high. So who's to say we can't do that again from a simple technical analysis standpoint? Which means that intuitively, the lowest we might be going on a loss side is to our 250 level, while from a bull side of things, we have a much, much higher room to gain. Now, I'm not saying we're going to, hit the November highs again. That would be pretty unlikely. But again, we just have a favorable risk-reward ratio for longing. So that's just a quick technical analysis of the future for NG. But I want to talk more about the news side of things, because like I mentioned in the beginning, supply and demand is a huge driving factor for the price of natural gas. And, sorry about that. Bit of a, not really sure what's going on with that. Like I was mentioning, though, supply and demand is a huge factor that contributes to the price of natural gas. So we should probably take a look at what's occurring on the news side of things to form a basis of where our price might end up going. So something significant to think about when assessing the future prices for natural gas are actually future contracts for the price of natural gas. So every Thursday, a report is released for natural gas. And in these reports, there will be price points for future contracts. When I say future contracts, I mean estimated price points of the future in future months. It's a lot of futures there, but yeah, that's essentially what that's getting at. So to elaborate on that, with the forecast thawing out over the last couple weeks and with the price subsequently falling, we are currently sitting at a projected contract price of for February 2019, we're sitting at a projected contract price of $295, and for March we're sitting at a contract price of $283. Now, what does that mean? Well, it tells us that natural gas prices aren't going to change much than they are now. In fact, they might actually be falling, and that we should be incentivized to go bear. However, history tells us that this should not be taken at face value. Now, these contract prices for future natural gas amounts are subject to change. You know, they haven't actually occurred yet. They're just the contract prices, and they can change quite frequently. Now, if we take a look at the exact same calendar date we're at last year, well, almost exact same, January 5th, 2018, the future contracts for February 2018 of natural gas were sitting at $280. Now, those were based on what was going on at the time. Of course, you know, things were subject to change just as much back then as they are today, and that actually played out in a way that will make the bears hesitant this time around. So on January 5th, 2018, February contract prices sat at $280. But later in January, the prices actually ended up trading up to $363. Now, that is quite different from $280 that we just discussed. And now if we actually go back and take a look, well, what happened early January 2018? We were sitting around the same price point that we're at now, a little bit lower. But throughout this month, we actually pushed up to much higher gas prices because of the contract pushing up. Now, this didn't play out the exact same way in the months to follow, but essentially that lower February contract price didn't hold. It actually went up. So why would it not go? Why is it not capable of going up again this time around? That's something that the bears are going to recognize, and it's going to make them hesitant this time around, and they're not going to be, you know, as in control as they think they are this time around, considering that happened last year. So another thing to consider when assessing the price of gas in the next couple weeks heading into February is the simplicity of forecast. So there's a lot of things I could say about forecast. I mean, I'm not a meteorologist, obviously, and I could be wrong about everything I'm saying. But I have, you know, done a little bit of reading on it, and the CEO for EBW Analytics, EBW does the market analytics for the energy sector of the market, energy, of course, containing gas. The CEO of that, his name is Andy Weissman, called for colder temperatures in February 2019 than 2018. Of course, colder temperatures as well heading into the next couple weeks. So, of course, you'll have to do your own research as well. This is something that I can't just provide off the top of my head, but general sentiment is pointing towards colder temperatures in late January, early February, and colder temperatures in February 2019 than February 2018, which means contract prices are likely to raise. So, what does that tell us? Well, from a news perspective, not only do we have history on our side with January 2018 saying things can play out, you know, the opposite of what they're projected, not only do we have weather on our side, but we also have some level of technical analysis on our side. So we have risk-reward ratio, we have the fact that it's oversold, we have likely bounce off of a significant support level right now. And one thing that I did not point out yet is if we're looking slightly short-term ahead over the next couple of weeks, this is the 4-hour chart for /NG, the future as well. We see that there's actually a bullish divergence playing out, which is very good to see as a trader looking for a reversal. How do we know there's a bullish divergence? Well, over the past couple of weeks, our price has been falling pretty steadily, pretty rapidly actually. Price has been falling. However, the momentum, which is indicated by our MACD indicator, has actually been making higher highs and rising. Price has been falling, momentum has been rising, making higher highs, and in that sense, we have a bullish divergence. And while you cannot take this indicator solely by itself, you can take it among other things to indicate signs of a reversal. So we have our bullish divergence looking likely. We have parked at a technical support level with room to grow. We have a favorable risk-reward ratio. We have the fact that it's oversold. And we have support from the news and history as well to tell us that there is potential for natural gas to push up over the next couple weeks heading into February. So in that sense, I would favor a long side right now. Now, of course, the numbers where you'd set your stop loss, where you would get back in case of a loss, those are all subject to change. And of course, those are all things you have to be able to formulate yourself as a trader. However, given that this is such a news-oriented topic, in all respects, my perspective of natural gas is subject to change over the next couple weeks. You might be favoring the bullish side of things one week, but the next week you might see a completely different scope of what's happening. So in that sense, a little text note pulled up again. With that being said, with all the technical analysis factors being taken into consideration, and with all the news factors being taken into consideration, I'm favoring a long side, favoring a push up over the next couple weeks. And that would pretty much do it for today. So again, take advantage of the natural gas sector. There's a lot of money to be made. In fact, as well, this is the future for natural gas. When actually deciding how to invest in it, you would look to ETFs. So one of the commonly traded ETFs is UGAS. UGAS is a triple leveraged ETF. It's very similar to natural gas, as you can see in the way it moves on the chart. That isn't a commonly traded ETF for natural gas, but given that natural gas is capable of doing the opposite of what you expected it to do pretty quickly, I would advise avoiding the triple leveraged ETFs if you're not entirely certain if you're trying to minimize loss. So another ticker you could trade, which is a single leveraged ETF, is UNG. And UNG moves pretty much exactly the way /NG will move. So that way, if you want to set a stop loss on the future of /NG and you want that to move parallel in your account, so if I set like a 3% stop loss on NG, and I want to only lose 3% of my account if it plays out that way, or 3% of your investments, then UNG will mimic that because it's single leveraged, while UGAS will not mimic that because it's triple leveraged. So 3%, 9% sort of thing. So those are pretty much your good ETFs to invest into if you're going to look at the natural gas sector. And if you expect a reversal and you want to go long, then that's where I would look to go. So again, be able to do your own analysis as a trader. These are just my thoughts on it. This is what I'm seeing. This is what I've read up on. Be sure to always keep your numbers up as well. This has been Ryan with Numbers Up Finance, and I appreciate you listening. Please be sure to like, comment, subscribe, critique, anything you can do to make us better as traders. That's always appreciated. We're just getting started out here, so any feedback will do. And thank you very much for your time. Happy trading as well, and keep your numbers up.